Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, let's take a look again at euro currency. As you can see, reaction on the Fed meeting is followed and market turns down. Actually we talked about this result because in general the data on Friday and last Friday was supportive to that, and overall sentiment around the euro was not really very supportive for the further upward continuation. So we talked about this weekly report. We just thought that probably should become a bit earlier, that the euro will feel this pressure, and we thought that probably hardly this upward action will continue, but somehow euro still was able to complete this ABCD pattern that we talked about yesterday, and oppositely to the gold, when the gold market just wasn't able even to show this upward action. So our warnings about the negative background around the markets, I mean in favor of the United States dollar, was reasonable, and we see corresponding reaction. So as a result, the expectation of the investors of the December rate increase have jumped to the more than 80%. So while on the beginning of this week it was around 70%, and this mostly currently is the driving factor for price action here on the euro. What we could expect next? So here market has confirmed the harmonic swing here and here. So see, market again has repeated the same swing. It starts dropping. Market has dropped below the monthly pivot point. Currently it's turning down. The problem for the euro is that actually below the market there is no significant support to exist. So all major supports of this swing has been broken. Next support stands around these lows, but it already has been tested once by this pullback. Second test probably will lead to grabbing the stops below them, and that could lead to the acceleration further. So currently the sentiment stands in favor of the dollar, and from that standpoint we are keeping our previous view that market could form our free drive pattern with the ultimate target around 111.80. It's 1618. But on the way down, we also have here another target. This is OP of the daily chart. It's also 127 extension of the previous leg up. So it stands around 1237 approximately. As we talked already many times, that stops that have been placed here probably will be touched, and that add some more downside power for the downward action. It could lead, the market could hit even this target and the momentum maybe by some spike or somehow in this manner. But currently the tendency in general on the euro currency is bearish, and that's actually what we expected to see on this week, but it has happened a bit differently. I mean this first 115 rally that we saw in the beginning of the week. So on the intraday charts, what we have, take a look at two important moments. First of all, market has taken out of the C point, it's broken lower, and it means that this ABCD pattern is not valid anymore. So we can't count on any XLP targets or something of that sort. Also, market has broken through major support area here, the 618 major support, the last major support of this thrusting upward action, and it means that this action is not a retracement. So usually when retracement stands at some strong level should be enough to keep market from the downward action, and market should turn up again. Here we did not see it. Overall thrust action here may be used for bread and butter setup on the 4-hour time frame chart. It's not perfect, but still here we see fast acceleration, and bread and butter, if it will be formed here, probably should work. On the hourly chart, guys, it's also another interesting moments exist. First of all, take a look price behavior around our former confidence support. So when we talked about the possible position taken yesterday, we said if you still would like to take the long position, Watch for this area because this is last moment where you will be able to take the long position, and this is a confluence. So if even market later will turn down, you probably will get the chance to move your stops to the break-even. And take a look. First touch of this area, pull back more than 30 pips. Second touch, again more than 30 pips. So that's what we're talking about every time. So use strong support areas, because even if you will be wrong later and market will turn against you, you will get the chance to move your stops to the break-even by just some technical response of the strong area. Yesterday it was really a bit difficult to take the short position because the retracement that we have talked about here has not been formed. So we thought it's probably it will be a bit stronger, but this hasn't happened. Only if taken in consideration the failure of the double repo pattern here or something of that sort. But anyway, market right now has dropped lower. Second moment here, guys, just take a look at acceleration. So AB leg is the one speed, and the CD leg is much faster. Market already has hit the OP, by the way. So in the current circumstances, we think that probably we should wait for some pullback, some retracement. It will be great if market will show the retracement to the 114 area. So it will be confidence resistance. Also, it will give us the top of the bread and butter on the 4-hour time frame chart, and that could be the level where we could think about taking the short position. If we will get simultaneously kind of the ABC retracement Gartley triple to sell, this will be much better. So our view currently is just that the sentiment has turned bearish on the market, as well as the direction, and we could wait for some pullback, make the decision on taking the short position.